Understanding the difference between Composite GSTN and regular GSTN. Hello everyone, and welcome back to our channel. In today's video, we'll be discussing an important topic related to taxation in India. We'll be exploring the difference between Composite GSTN and regular GSTN. So, if you're someone who wants to gain a better understanding of these terms, you've come to the right place. Let's get started. Before we dive into the differences, let's quickly refresh our knowledge about GSTN. GSTN stands for Goods and Services Tax Network, which is an IT backbone that facilitates the implementation of the Goods and Services Tax, GST, in India. It acts as a platform for registration, filing returns, and other GST-related activities. Regular GSTN. Regular GSTN is primarily meant for businesses that engage in regular taxable activities. Whether you're a manufacturer, service provider, or a supplier of goods, if your annual turnover exceeds the prescribed threshold, you are required to register under the regular GSTN scheme. 1. Registration process. To register under the regular GSTN scheme, you need to provide detailed information about your business, such as the nature of goods or services, financial details, and contact information. 2. Tax liability. Under regular GSTN, businesses are required to file monthly or quarterly GST returns, depending on their turnover. They need to maintain proper books of accounts, including invoices, to calculate their tax liability accurately. 3. Input tax credit. Regular GSTN allows businesses to claim input tax credit on the tax paid on their purchases. This means they can deduct the tax they paid on inputs from the tax they collect on their sales, resulting in a reduction of the final tax liability. Composite GSTN. Now, let's shift our focus to Composite GSTN, which is designed for small businesses with lower turnovers. The Composite GSTN scheme offers a simplified tax compliance structure, making it easier for such businesses to meet their GST obligations. 1. Eligibility criteria. Businesses with an annual turnover up to a certain threshold, currently set at 1.5 crore Indian rupees, can opt for Composite GSTN. This threshold may vary, so it's essential to stay updated with the latest regulations. 2. Simplified compliance. Unlike regular GSTN, Composite GSTN reduces the compliance burden for small businesses. They need to file quarterly returns instead of monthly or quarterly returns. Also, they are not required to maintain detailed books of accounts. 3. Flat tax rate. Under the Composite GSTN scheme, businesses pay a flat tax rate based on their industry category. This rate is a composite rate that covers both the central GST and the state GST. However, they cannot claim input tax credit. 4. Limited business operations. Composite GSTN is only suitable for businesses that have limited operations or fall within specific sectors, such as restaurants, small traders, or service providers. Final thoughts. To summarize, the main difference between Composite GSTN and regular GSTN lies in the eligibility criteria, compliance requirements, tax liability, and input tax credit. Choosing the right GSTN scheme for your business depends on factors like turnover, the nature of operations, and the desire for input tax credit. That's all for today's video on the difference between Composite GSTN and regular GSTN. We hope this explanation clarified the distinction between these two terms. If you have any further questions or need additional information, please feel free to leave a comment below. Don't forget to like this video and subscribe to our channel for more informative content. Thank you.